Hey, good morning, everybody. Yeah, you did, Gene, and that's why I was like, just trade that two lot, add 100, make it bigger. It makes more sense. Lower contracts and just more money. Gene, I love the fact that you're devising a plan before you jump in the water, right? You're making sure you can swim before you belly flop. So that's good stuff. Guys, we're a few minutes early. Good morning, Chef. Nice to see you, Dwight. Good to have you. Guys, it's great to have everyone here. Hope everyone's doing wonderful. Had an amazing weekend. Yeah, we all have. Isn't it funny how you have to though? You have to take a couple on the chin before you really embrace the idea that it just takes a solid plan and consistency, and then you can accomplish anything. I don't think there's anyone in the room that hasn't been there. Guys, just not that I expect it to happen, but this is my first day in a brand new place with brand new internet, and it seems to be strong. But if for some reason the visual goes away, or for some reason um, my voice stops being melodious in your ear, just let me know. Um, Give me a little warning in there. Good morning, Bobby. Good morning, Alan. Coming to you guys from beautiful Lago Vista, Texas. I'm excited about the day today. Um, Market's going up and down, right? Pretty cool. Um, I'm excited about today because we're going to talk about what we talked about on Friday, right? We're going to get through it and we're going to talk about rules. And we're going to talk about advantages. And I had this little horrible analogy in my head because that's kind of what the Novak brain does. It creates horrible analogies. Guys, your rules that we talk about, the rules for the high probability trend trade, the trade that typically wins 70 to 80% of the time, the trade that revolves around advantages, by having rules in place, by having a plan as you go into trading, it's very much like looking both ways before you cross the street, making sure that it's clear, making sure that it's the safest that it can be before you take that first step. And that's what we're going to do. We're going to talk about making sure that we have those advantages, that there's no oncoming traffic, and then we're just going to knock it out. And we're going to have some fun today, guys. So today is Monday, October 16th. The first thing I do every day when my charts are loading is I check news and I make sure that there's not something going on. I make sure that there isn't a red box. Empire State Manufacturing Index. Guys, I don't know what that means. It has something to do with the Empire State Building, maybe King Kong, I don't know. But what I do know is that it's a red box. And because it's a red box, it was, Ron, it has the potential to move the market, to make it act erratically, to make it too fast to trade. So for me, once again, with everything revolving around advantages, why on earth would I want to be in a position if the market can have a huge emotional reaction? You'll have to make your own choice on that one. I can tell you that if you're doing something like Apex, they forbid you from trading around these high impact newses. At 10:30 a.m., FOMC member Harker's got something to say. That could make it jump, bump, all that good stuff. Man, Chef, we all do at least once. Um, Forget to look at the clock, forget to check our news. You get in the position, and the next thing you know, not only did you lose your trade, but they slipped you $500 because it was so emotional they couldn't get you out in time. So, guys, I'm always looking for red, high impact, and I'm looking for orange, medium impact. Good morning, Luciano. Good morning, Miss Debbie. And, guys, here's a true story. I could literally only look at that. Everything off to the right is non-consequential to me. Hey, what's going on, Alan? Guys, I'm just looking for boxes. I don't worry about what they say. I only worry about when they say it. So our next one is at 10:30. It is medium impact. It does have the potential to move the market. So write a note on a piece of paper, set a timer, um, make a decision. And then everything that I talk about, guys, comes from the Fibonacci day trading, next gen education. Um, Let me see. I'm not sure that it's going to roll today. So let's do this, Ron. Let's go File, New Market Analyzer. Whoops, before I do that, I have to actually get the next contract in. If you're on 7, guys, you have to add your contracts. If you're on 8, it's going to give you a note that says, hey, we're going to roll your contracts. And I can tell you that I didn't get that in there. And Ron, it's not prompting me to December yet. And when it doesn't prompt you, it's not the roll yet. The roll should be tomorrow, should be the 17th. So if I put in that 1223, let's take a look and see what it does. Let me click OK, and I'll create a market analyzer and we'll look at the volume of it. So I will go New, Market Analyzer, comes up on a different screen. I'm going to load the template that Nexgen gave me that just says Nexgen default analyzer. Once I put that in, we'll get both of my crude oils in there. We'll get 1123, and then I'll also get 1223. And you can see that the volume is still on 1123, Ron. It's got more going on than the 1223. So for me, I'm going to hold off. And guys, remember, tomorrow's the official roll date, which means that if this is split 50-50, good morning, Jose. Guys, I never tell you what to trade, when to trade, or how to trade. But what I will tell you is that when the volume is split, the flow isn't as flowy. So you have to make a decision on whether or not you want to be a crude oil trader on the days when the volume is split. And then, guys, everything comes from here. It comes right from the tutorial section. All the rules, everything that I talk about. And we're gonna bump through this a little quicker than usual today. So if you're brand new, if you're working on your rules, I want you to stop me if you need help, but we're going to kind of expedite so we can get to the live market, so we can look at things, so we can talk about the things that you guys want to talk about. Um, but the first thing that I'm going to talk about, and the one thing that I want you to focus on, guys, for your first 20 days with Nexgen, is high probability trend trades. Give yourself the advantage of having a trade where every indicator on every chart agrees with the trade. Give yourself the advantage of having a trade that typically wins 70 to 80% of the time. And take this trade, learn this trade, how to get in at the correct spot, because it's going to make you a chart reader, guys. And a chart reader should be the ultimate goal. And when you're a chart reader, you're going to understand where the market is likely to continue, where it's likely to go, where it's likely to stop, and you're going to incorporate these elements into taking and managing high probability trend trades and medium probability trend trades as you grow with the software. So every day I remind you guys, there's a step-by-step path to becoming a confident trader. There's a pretty easy recipe for getting to where you want to be, and it starts with posting your pictures in the class, guys. Show me everything. Show me the good, show me the bad, show me the ugly, and the idea is that I'm going to give you feedback on everything that I see, and every time I do that, I'm just going to go back to the advantages. I'm going to go back to what was working for you in this trade, what perhaps was working against you in this trade, and together you and I are going to move forward a little bit every day and get you to that point of consistency. And then I'm also going to encourage you to track your real-time performance in a spreadsheet. NextGen's provided it to you. It's just a trade journal. That's all it is. Dear Diary, today I took a long, I broke my rules, it kicked my butt. And then tomorrow when you wake up, you're going to study it. You're going to look at your trade journal and you're going to say to yourself, what worked? When I followed the rules, did it work better? When I had the advantage of momentum, did it work better? What didn't work, right? What felt easy? What felt forced? Guys, this little review every morning of what you did yesterday, maybe what you did Friday, since today is Monday, it's just going to put you in that right frame of mind, right? Friday, I walked up to a bully and I told him that he was ugly and he punched me in the nose. So today, I'm not going to mouth off to a bully because I want to avoid getting punched in the nose. But this little study each morning, guys, it sets you up for the day. It accelerates your learning because recognition, excuse me, comes through repetition, guys. Doing the same darn thing over and over every day until it becomes easy. So we're going to talk about the rules for that high probability trend trade. We're going to go over the advantages, we're going to go over what they look like, and we're going to go over how to enter at the best of the best spot. You guys simulate. Keep that simulator fired up. Take everything that you think follows the rules, then post it in the room, and then we'll talk about whether or not it did, and we'll talk about how to get you where you want to be. And I want you guys to simplify. I say this every day. Nobody believes me. Keep it simple, guys. Focus on one thing and get really good at it. And then when you're really good at it, add something else, right? So if it takes you 35 seconds to identify the high probability trend trade. I want you to focus on that high probability trend trade until it takes you about 5 seconds. And when you can recognize a high probability trend trade in 5 seconds, and you will get there, then add on that next trade. But you have to learn the looks so that they become easy. You have to be able to recognize the patterns and the advantages so it becomes easy, so it happens in the moment. And that's what we're going to do this morning, guys. We're going to focus on a trade that only has 3 rules. And this trade that only has 3 rules consists of 3 advantages, right? It's going to be large chart says strong triggers, gives you the advantage of momentum. Large chart says no termination conditions are true. You have room to your profit targets. That'll give you the advantage of a clear path. And then we're going to define our entry at areas inside of triggers, guys. And that's going to give you the advantage of an entry area. It's these 3 advantages that create a trade. It's not the other way around. We don't take trades and then hope the advantages are present. We identify the advantages, and that's what gets us into the trade. And then these 3 rules come about on only 2 charts, guys. Simplicity. The large chart will define direction, momentum, and areas. It's going to do that with 1 bar. It's a slower chart. It's a bigger chart. It's a broad stroke of a brush telling you, hey, the market says it's going up. The market says there's momentum there, and there's not a darn thing in the way. And with this broad stroke, once you get this, once you have those first 2 advantages, we're just going to refine it. We're going to go to a smaller, faster chart. What happens in 1 bar, the most current bar on your large chart, is going to happen on 15 to 30 bars on that smaller, faster chart. That's where we're able to take that overall look, that desire of the people that move the markets, and refine it down to the best of the best area. We're going to enter. Rule number 3 is going to teach you how to get in there. And this is going to allow you to reduce your risk, and it's going to allow you to, excuse me, increase your profit potential. So what we're going to do, guys, is we're going to focus on these 3 rules. We're going to make sure that you can identify them in the moment. And then once you're able to identify one, you'll go to the next, you'll go to the next. We're going to get good at one thing. We're going to take a foundational approach. And then once you can identify 3 advantages, you're going to pull the trigger and you're going to take that high probability trend trade. And it's a trade that creates confidence through the memory of success. As you trade throughout the day, please post pictures in the room. Tell me what you're doing. Tell me why you're doing it. Show me where you did it. And then the second and third hours are going to be us talking about your looks. It's going to be us talking about the live market. And we're just going to keep doing the same thing. Repetition, creating recognition until it becomes easy. So without further ado, let's giddy up, guys. Let's get this day going. Rule number 1 says that you have to have strong trigger lines on your large chart. You can't have strong trigger lines without identifying the trend, because the trend is the only direction you can have strong trigger lines. So if the background on your large chart is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. And if the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. And then recognizing strong triggers once you've identified that trend becomes easy. Triggers are 2 parts, guys. It's your small triggers, these solid lines, and your large triggers, these dashed lines. These are both moving averages. Doesn't matter why they are or who they are. What you need to know is that when you have strong trigger lines, when you have separation between the small and the large, when both are wide and angled in the direction of the trend, it's the space between the two that lets you know that you have odds favorable momentum. The market the odds are favorable for the market to continue in the direction of the trend. This is the best of the best. This is the strongest trigger line. This is rule number 1. Going the other direction, the exact same look. Small's below the large are wide. They're angled in the direction of the trend, but it's that gap between the two that lets me know that I have the advantage of momentum. This is that strongest trigger line, and when you have this look, this is the best look for using that smaller, faster chart to buy Fibonacci support to continue in the direction of the trend, or to sell Fibonacci resistance and continue in the direction of the trend. So guys, this is your strong trigger line. This is the first. This is rule number 1, creating the advantage of momentum. And if you just commit to this advantage, what you're going to find is the market is most likely to push in the direction of the trend. And the opposite of strong is going to be weak. If your small triggers are inside of the large triggers, this is a weakening of the large triggers, and it means that you no longer have the advantage. It means that anything can happen up or down, and it is not the best of the best look for taking a trade, for looking for an entry in a long position, guys. So we're going to keep it simple today. Is everybody cool with that? Separation between the small and the large, wide, angled in the direction of the trend. This is your first rule, guys. That's strong triggers. That's the advantage of momentum. This sets the pace. This gets you looking for the absolute best of the best. Pretty easy so far, guys. We've got odds favorable momentum, and we're trading with the trend. We're already racking up advantages. And once we do that, we have to make sure that there's nothing in the way. We're going to make sure that the termination conditions are false, that room to the profit targets are true. Guys, this is basically saying that you have a clear hallway to the next door. That's it. There's nothing in the way, nothing to create a bounce. This happens on the large chart, and it happens by identifying areas. And the areas that may create a bounce, that may create a reversal, the areas that may take the wind out of your sails should you trade into them are going to be divergence high lines, these magenta lines. These lines print from pivots when there's a loss of momentum, when momentum does not follow price. It's calculated behind the scenes. It uses MACDs, if you guys are familiar with those. But Nexgen has taken all of the math out of it, all of the visual out of it. And all you have to do is when you see a magenta line, you know that there's a loss of momentum. And when you see a cyan line print, you know that there is a loss of momentum. We're also looking for red Fibonacci resistance, blue Fibonacci support, and these yellow 1-to-1 dots, guys. All of these areas may reverse the market. All of these areas may take away your advantage of a clear path. And it becomes a pretty simple idea, a pretty simple recipe to identify termination conditions. Um, if price, meaning these dynamic Renko bars, reaches an area, in this case, it's reached Fibonacci resistance. All you have to do is ask yourself, where are my trigger lines? If all of your trigger lines remain below that area of resistance on your large chart, you no longer have a clear path. This becomes an area that may reverse the market. It may create a bounce that's untradeable. It may end up breaking, but you don't know. We don't control the market. You don't know what's going to happen when price reaches and the triggers remain below. So this is an opportunity for next-gen users to sit on their hands, to wait, to see how it reacts, rather than hoping or guessing or wanting. This area is no longer a termination condition when it's broken. And when an area is broken, it means that both the small triggers and the large triggers must get beyond the area that was behaving as a termination condition. So in this case, resistance is hit, the triggers are below, there's absolutely nothing to do. Both the small and the large triggers get to the other side of resistance. Now it behaves as support, now the path is clear, now next-gen users are looking for that high probability trend trade long. So in the beginning, there's really only two options, guys. Either it's broken or it's not. And then we're going to introduce a third option, and this is going to be after your first 20 days. This is going to be after you're comfortable with a high probability trend trade. This will be the introduction of your first medium probability trade. And a medium probability trade means that there's a problem, that one of those advantages has gone away. It means that you've either lost the advantage of momentum, you've lost the advantage of a clear path, or you've lost the advantage of an entry area. The first and easiest to take is when you lose that advantage of a clear path, guys. And what that means is that fibs break all the time. So you'll be able to identify in the moment when an area has the potential to break. So for example, price reaches Fibonacci resistance and absolutely no trigger lines break. This is our opportunity to sit on our hands. And then the small triggers, because of the odds favorable momentum, begin to really smash through that 69 area, 69.80 area. And what this tells me is that this area has the potential to break. It means that with all that momentum pushing the market in the direction of the trend, this area may break. But until the smalls and the large get to the other side, It's not broken. So the potential is present, but the path is not clear, guys. This becomes the challenge in the trade, which means that when you have these potential to break areas, it's imperative that you don't sacrifice momentum, that you don't sacrifice an entry area. Otherwise, you move from medium to low, and low is a horrible plan. Is everybody okay with the idea? I've got about 26 of you in here, and I'm looking for new names, and I don't see a whole lot. Um, RPG 76, welcome to the room. That's a new one for me. D Soap, it's good to see you back. Guys, if you're brand new, I want to remind you that this is your class. I want you to ask every question you can possibly think of. I don't want you to be shy. But this is rule number 2, guys. This is your scenario. Either you have a clear path or you do not. And I'm going to show you how it works during the day. This is crude oil. Price reached a divergence low. Absolutely no trigger lines broke through. Look how the market rockets up, guys. We can identify these termination conditions to keep us out of trouble. Price reaches yellow 1-to-1s. The triggers don't break and the market bounces. Price reached resistance. None of the trigger lines broke. The market shoots down. This becomes a safeguard. Price reached support. Absolutely no trigger lines broke. You guys knew not to go short. Guys, you can go through all day, snap a picture every time you see a termination. And then the same thing is true on those potential to break. Small triggers smash through, large triggers did not, and the area holds. But here the small triggers smash through and the large triggers don't, and ultimately the area breaks. You're going to be able to identify through chart reading when you have your best shot. Once again, area with the potential to break ultimately does not break. Textbook termination conditions right in the middle of the night, that's what creates the reversal. That's what pushes the market down. And it was a textbook termination condition that got us up to that key area. Guys, your advantages lie in between these termination conditions. Is everybody comfortable? Price reaches, no triggers, no trade, guys. Price reaches yellow 1-to-1s, no triggers have broken through. Let's sit on our hands and see what happens because we don't have the advantage of a clear path. Going to be that quiet classroom today. That's okay. Going to talk about pivot stop outs. Pivot stop outs are a termination condition that happen all the time on your large chart, guys. When this cyan line prints from a pivot, it's not a termination condition because price didn't reach it. Price creates it. When price reaches a divergence low and all of the trigger lines remain above, guys, this is what we call a pivot stop out. Pivot stop outs basically are the buyers rob the sellers of momentum. The sellers try to push past it again, and the buyers use this as a line in the sand. The sellers try to push, the triggers don't follow, Nexgen users don't go short, they preserve their equity, and ultimately the market reverses. The buyers take over. This is a termination condition, and this termination condition that creates a full reversal is what we will call a strong bottom. And a strong bottom is a precursor to your highest probability trend trade that you can take. These pivot stop outs will happen at highs as well. But when they happen with Fibonacci areas, they're even more powerful. And this is a great example of how we have to be a little patient to wait for those advantages. Price reaches resistance and none of the trigger lines break. Therefore, we're not going long. Price pulls all the way back to Fibonacci support. None of the trigger lines are capable of getting through the area. Next-gen users have the advantage of not trading into these key areas where the people that move the market are making decisions. We're going to exercise just a little bit of patience. Ultimately, it comes up to Fibonacci resistance. It comes up to a divergence high line. It comes up to a second resistance. All you have to do is identify the position of your trigger lines. Are they below the area? Since they are, no more long trades. Guys, we're sitting on our hands and we're waiting for that clear path. We're waiting for that momentum. There's another one of those pivot stop outs. It coincides with resistance. It adds power to the top. If this strong termination condition reverses the market, this is a strong top. This is the precursor for the highest probability trend trade you can take. And from this reversal, notice how we get odds favorable momentum. Notice how we haven't reached Fibonacci support. Rules 1 and 2 are met, and there's one of those potential entries for that highest probability trend trade that you can take. So it's not so much what you're doing in the market, it's what you're not doing when there's nothing to do. We're going to be professional waiters. One more example of terminations, guys. Price reaches these yellow 1-to-1s, even with odds favorable momentum. Absolutely none of the trigger lines break. Decisions are made at key Fibonacci areas, guys. Buyers and sellers are taking profits, entering positions, exiting positions, and it creates indecision. This is where you have such an amazing advantage. You know where the area was. You can use trigger lines to determine whether or not it's broken or not. And then you can sit on your hands and do absolutely nothing as they duke it out, as they fight it out, as buyers and sellers shoot for supremacy. Look at the push up, down, guys. It all happens because of this key area. Ultimately, the market reverses. That creates a strong bottom. Once the market reverses, both small and large get above the area of resistance. It begins to act as support. Rule number 2, and then the smalls outside of the large, rule number 1, and there is that potential entry. There's that best of the best. Getting Nexgen users into the market with a clear path with the advantage of momentum and coming from a termination that creates a full reversal. Guys, it's going to take you about 3 days to get comfortable with the idea that when price reaches an area and none of the trigger lines break, sit on your hands and do nothing. Price reaches an area, none of the trigger lines break. You guys knew not to go short. Nobody lost any money, hoping that the area broke. And then our final termination condition, guys, is going to be a small chart termination. It's the only termination that I look for on a small chart. And that's 3 divergences in the same price range, 3 losses of momentum in the same price range. You know that there were 3 because the cyan line prints 3 times. You know there were 3 because the magenta line prints 3 times. Guys, you're going to see this on a smaller, faster chart. Remember that the large chart is a broad stroke of a brush. The small chart is 15 to 30 bars for every 1 bar on the large chart. When you see 3 in the same price range, sit on your hands and do nothing. The market may push up. 3 in the same price range from a high, sit on your hands and do nothing. The market may push down. The only termination condition that I'm respecting on the smaller chart. This look becomes more powerful when the small triggers are inside of the large triggers. We get that anything can happen look, taking away the advantage of momentum not only through divergence but also with the trigger lines. You also see it at the high, and it becomes more powerful still when that third divergence is higher than the previous from a low or lower than the previous from a high. And guys, this look lets you know on a smaller, faster chart that this change may be happening on a larger chart. Your larger chart may have odds favorable momentum. It may have a clear path, and you'll be able to recognize it because 3 divergences printed. You're no longer looking for that long trade. So, guys, these are our termination conditions. Notice that 3 divergences pushed it a little higher. You don't know how it's going to react, and it may ultimately break. But in the moment, you get to stay out of that fight that's happening right there. So there's your first 2 advantages, guys. You have the advantage of momentum. You have the advantage of a clear path. And now we're going to use a limit order to buy or sell an area inside of favorable large triggers, guys. So we're going to buy or sell a pullback, a tiny retracement in price that's counter to the underlying trend. And we're going to do this at areas, fibs, midbands, yellow 1-to-1s. And this is where class gets a little different. I'm going to introduce some really cool stuff that John Novak put together this weekend for entries. We're going to talk about the traditional entry, using areas to enter the market. But really, we're going to identify our window of opportunity. The rules say we're going to buy or sell a pullback at an area inside of favorable large triggers. So favorable large triggers mean that you're large, you're synthetic. They're trending one on top of the other, guys. They are wide, they're angled in the direction of the trend, like snakes riding piggyback on that smaller, faster chart. High probability trend trades come from the areas within fibs, midbands, yellow one-to-ones that are enveloped inside of those favorable large triggers. Uh, but when the rules are met on the large chart, when you have strong trigger lines, when you have termination conditions false, the look on your small chart is going to be that of a runaway market. You're going to have odds favorable momentum, smalls above the large. Your large and synthetic should be one on top of the other, wide, angled in the direction of the trend. You're making the decision that it's time to look for an entry. So you're looking for fibs, mid bands, or yellow one-to-ones, and you want them to fall inside of those favorable large triggers. Rule number 3 says that we're going to buy a pullback. And a pullback is a tiny little retracement in price that's counter to the underlying trend. Your large chart represents the large crowd, the people that move the market. The large crowd defines direction. The large crowd defines momentum. The large crowd defines your areas. When the path is clear and the momentum is the strongest, we rely on the small crowd to force a pullback. We rely on them to fight all of those factors that get us looking for a trade. That's what creates this small retracement that's counter to the underlying trend. This retracement gets us back to our best of the best area. This retracement gets us back to our advantage, that limit order at areas inside of favorable large triggers. So we wait patiently on that smaller, faster chart. We wait for the market to give us that reversal bar to signal the beginning of that pullback. And when this happens, you're going to be able to define your window of opportunity. It's going to extend from your highest point of support for longs. Let me get one that shows both directions. Reversal bar prints. You're looking for your highest point of support closest to price and your lowest point of support furthest from price inside of favorable large triggers. Notice that inside is in all caps. Because price tends to correct to those triggers, and when we give it a place to bounce, we create the advantage, that best of the best point where the market is likely to continue. On a short trade, it's exactly the same. We're going to wait for the reversal bar, and then we will identify the area of resistance inside of favorable large triggers, fibs, midbands, yellow one-to-ones. Sometimes, guys, we get lucky and there's only one line, and your window of opportunity becomes very small. But that's the point where the market is most likely to continue. This becomes the area where the market is most likely to continue. Next-gen users will activate a limit order at that highest point of support, at that lowest point of support or resistance inside of favorable large triggers. And this becomes the entry for your highest probability trend trade. And I'm going to skip ahead to this slide because I want to give you the introduction of something that John Novak was working on. Guys, one of the things that we do in Nexgen, one of the things, if you've ever met John Novak, does in Nexgen is he's a firm believer that it can always be better. He's happy, but he's never satisfied. And he's always looking for opportunities to make your job easier than it currently is. And I love this look, guys, and I get excited about stuff when this happens. Everything is the same. You're going to wait for the reversal bar on your smaller, faster chart. You're going to identify from the top of your trigger lines to the bottom of your trigger lines. And then you're even going to go so far as to create your window from the highest point of support to the lowest point of support. Is everybody comfortable with this? What we're doing is we're identifying where the market is most likely to continue. And it's most likely to continue inside of this box because of the advantages on the large chart. Can you guys give me a Y in the room if you're with me? And those of you that are experienced with Nexgen, you're about to get real excited about some stuff. Rule number 3 says that you will activate a limit order right at the top of that window, and you are literally going to buy the market on its way down. John Novak had the revelation that that's uncomfortable for a lot of people to watch the market come down and get in a position long. This is when you're comfortable with the methodology, when you're comfortable with the ideas, when you have the repetitions, this becomes your best entry, guys. This becomes the entry that gives you the least amount of risk. This becomes the entry that gives you the highest amount of profit potential. This is where we're going to enter the market. And guys, when you enter the market at the highest point of support, you're going to put a stop below that window of opportunity at the point where the market shouldn't go. This is going to be your, I'm going to say this is going to be your second entry. This is going to be when you're comfortable with the idea that you can buy the market, when it does have the highest chance of success. Um, but what happens is as that market pushes down, it may go to the bottom of the window. And that's totally okay. You're still in a position with all of the advantages. You still have odds favorable momentum. You still have no termination conditions. You still have the area where the market is most likely to continue. We put a protective stop outside of the window because we always want to manage risk. We always want to give ourselves the best chance of success. And if we do take one of those occasional losers, one of those 20 to 30%, we want to make sure that it's not a huge loser, right? So we put a stop there. And if it gets hit, it's okay. Stops, small losses are a normal part of a positive equity curve. So guys, this becomes your best of the best entry. This becomes your lowest risk, highest probability entry for the high probability trend trade. Is everybody comfortable with that? Reversal bar. Buy the pullback at the highest point of support. Put your stop where the market shouldn't go. Guys, this is the high probability trend trade. In the beginning, it becomes a little chaotic, a little nerve-wracking to buy the market on the way down. So there's another way to do it, and this is what John's been studying extensively. We still wait for the reversal bar, and we still identify the areas where the market is most likely to continue, from the highest point of support to the lowest point of support. One of the things John went back, tested over and over, is Nexgen users, you can wait for the reversal bar the other direction. This creates a little bit of confirmation. This is saying now the market is going in the direction of the trend. Now the market is following that momentum. It's got that clear path. It has room to its target. And then rather than buying it on the way down, this is just a second option, guys. You choose the one that's most close for you, that's most comfortable for you. You can buy at the close of that bar. You can hit buy market now when that up bar goes up. And the great thing about this is that your risk is already established, and your risk, hey JW, great test. Your risk goes below that reversal bar that gets you into the market. Guys, it's a little different, but it's still exactly the same. Those of you that are experienced, and maybe you're taking those trades where everything isn't perfect. Maybe you're taking those 50-50 trades. Um, Guys, waiting for this, there's a cost of confirmation, without a doubt. You're not getting in at the best of the best spot. Your profit target is a little bit closer than it was, but you do have the confirmation of the market going in the direction. Your stop is already established because you're going to put it below the reversal bar. This becomes a great opportunity for you guys. And I took a picture this morning where, but you never moved your stop. So now you know that you can move your stop, right? But this is one of those areas with the potential to break. Does everybody see it? Odds favorable, everything's cranking up, strong triggers, and you identify the window of opportunity, that mid band right inside of the favorable large triggers. There's a lot of you that love this 50-50 look. There's a lot of you that will take this trade because of the momentum. This little confirmation piece, guys, keeps you out of the trade. Do you see it? And I'm talking to you guys that are a little further along. Tony, Jose, Bobby, Andy. You guys that have been taking this trade, trying to take these 50-50s and figure them out, at least you get to wait for a little bit of confirmation, right? And it keeps you out of a loser here. So two ways to do it, guys. Either at the top of the window, because you have all the confidence in the world, and when it's perfect, when you have the best of the best look, when you have odds favorable momentum, when you have a clear path, when you have that perfect window of opportunity, guys, crude oil, S&P, Your best entry, your lowest risk entry comes from the areas inside of favorable large triggers. As you develop trust in the methodology, as you develop your ability to recognize this area, this little confirmation bar, this reversal bar, gives you just a little peace of mind that the market's starting to do what it wants to do. So there are two options, guys. There's two options for that highest probability trend trade entry. Is everybody comfortable with that, guys? We've just gone through the whole gamut here. We've talked about the advantage of momentum with strong triggers. We've talked about the clear path with no termination conditions. And guys, I'm going to tell you, this never changes. Without these two, this entry, no matter which version you choose, is often doomed, right? You have to have that momentum. You're looking for that clear path. And then for your entry area, let's give you options. Let's give you options that make it easier. Either enter at the point of support or resistance inside of favorable large triggers, or simply wait for the confirmation. Your risk is established, but there is a cost for confirmation. When your large chart's perfect, you're going to develop the trust to get in at the area. When the large chart isn't perfect, maybe you wait for confirmation. And guys, this is your high probability trend trade. This is your best of the best. This is your first 20 days. This is getting comfortable with what you're looking at so that you can repeat it each and every day, so that you can have those advantages, so you can make sure that the traffic is gone before you cross the street. I'm going to give you a couple things to help with this. I'm going to give you a checklist reminding you what you're looking for. This checklist isn't designed to be the end of the road for you. This checklist is designed for you to print it out, to put it on your desktop, to confirm what it is that you see, making sure that you have those advantages. I'm giving you a copy of the exact same checklist that has it visually, that shows you what a termination that creates a full reversal looks like, that shows you the momentum advantage, that shows you the clear path advantage, and then helps you define where you're either going to enter the market at that highest point of support or lowest point of resistance, or the area where you're going to wait for that reversal bar to get you into the trade. And then John has created, and I like this very much, let me figure out where it's at. He's put it all together in a PDF for you, reminding you that momentum is the key, guys. And notice that he starts with that, making sure that your path is clear. And then he just defines that entry point. He puts it all in one easy to trade PDF, showing you exactly where we're looking for those entry bars, talking about, and gosh, that's tough to see. Let me see if I can zoom it. There we go. This is the picture right here. These are your two choices. Choice one, I'm going to give it to him, John. Choice one is waiting for a reversal bar at that absolute best of the best spot, that point where you're anticipating the market to continue. Or choice two is getting it at the best spot, the last spot, waiting for that confirmation piece, waiting for that reversal bar to give you in, to give you that look, to get you into the trade. And then he also goes through and talks about managing those trades, using pivots to continually follow the market, to give yourself an advantage as you go through. So guys, he just dropped it in the room. Scroll through it. We'll scroll through it throughout the day. We'll use it for reference all the time. It's an awesome material. It not only talks about getting you into the market at the exact place, but it helps you with management a little bit. Management takes a little bit of chart reading. Management takes a little bit of confidence in your ability to chart read. So I'm also going to give you right now, this is a plan just to help you stay focused for the first 30 days. The disclaimer says that this plan is a stepping stone in your learning journey, and I think that that's important for you guys to remember. The easier you read charts, the more you look at it, the more repetition that you have, the more patterns that you readily recognize, what you're going to find is that you're going to see more and more opportunities. But this plan is designed to get you focused on your chart reading, to give you the best chance to optimize your chances of success with that high probability trend trade, and then also that 50-50 trade, that area with the potential to break trade. It's going to be through your simulation, through your study, through your class feedback, and your continuous practice. That's how you're going to craft a plan that's tailored to your needs. If you were paying attention to Gene and I speaking this morning, Gene was talking about preparing his plan before he ever chose to go live in the market. He was using simulator, he was changing strategies, he was adjusting, and he was doing all of that in a simulation field, getting ready to go to that live. And then you'll be able to create your plan based on your ability to read your indicators, based on what you see, how you see it, and how easy patterns are to recognize for you. And recognition is going to create that from repetition. So the simple plan for consistency for new users begins with never fighting the large chart. Don't fight the large chart direction. Don't fight the large chart triggers for your best chance of success. Omitting those two factors, fighting trend and fighting momentum, for most people will remove nearly half of the problems I see new users have. Defining your entry through that high probability trend trade, making sure that you have those advantages present, getting into the market at the right spot. Guys, this is what is going to make life easy on you. It's going to put you in at the best spot, and great entries become manageable trades. And then I've given you a very pragmatic approach to management. And this is your initial management from the entry. And then as we go through that PDF file that John Novak shared in the room, you'll be able to expand your management plan to holding for bigger, longer moves. This one is designed to get you in, to get you out, and to keep it emotionless and pragmatic. And it all revolves around getting in at the best of the best area. If you choose to get in at the area inside of favorable large triggers, if you choose to sell as the market's coming up, here's your entry, and your initial stop will go outside of those favorable large triggers. It'll go where the market should not go. Whoops, sorry. But everything is predicated by that great entry. If you choose to take the second entry, waiting for that confirmation bar, well, then your stop is going to go just above that reversal bar. So there's two options for new users. Enter at the area inside of favorable large triggers. Your initial stop is outside of that window of opportunity where the market shouldn't go, or enter on the reversal bar. And then your stop will go two ticks above that reversal bar. And if you had gotten in here, this becomes your new stop. Your stop movement happens with the reversal bar. So it's up to you which you'd like to take, guys. I say practice both. See which one feels better. Um, and then your profit targets are in the distance. There's nothing for you to do except wait to see if your profit targets get hit. If your first profit target gets hit in this very emotionless plan, it's set at $100. And $100 creates confidence. $100 creates really, there's like this dopamine kick that comes from it. NinjaTrader tells you that your target was hit. You've got money in the bank. You're feeling great about it. You're a winner, right? And being a winner feels good. It creates confidence through the memory of success. You're going to move your stop to break even. You're going to eliminate all risk on the trade. So not only are you money in the bank, but you're also nothing to lose, guys. And this is a smaller target, but it gives you the confidence to believe in that large chart. It gives you the confidence to trust that momentum, to trust that clear path. And it makes it easier for you to sit on your hands and do nothing and see if we can get to that second target. And that second target's only $100, guys. Or $200, excuse me. But if the second target gets hit on this highest probability trend trade, guys, it's a $300 trade. It's a trade with every advantage possible. It's a trade where you're in and out quickly. It's a trade where you manage your risk. It's a trade where you find yourself with nothing to lose. It's creating confidence through the memory of success. And guys, if all you do is hit one $300 trade every day, that's a $1,500 week, and that turns into a $6,000 month. And those of you that are great at math, I don't need to tell you that this is a $72,000 year based on two contracts, one trade, every advantage, and it all stems from perfect entries. It all stems from getting in at the absolute best of the best spot, creating that manageable opportunity. And guys, that's it. That's our focus for the first hour, is that high probability trend trade, that absolute best of the best. Give me 20 days of focusing on entries. Give me 20 days of pragmatic management. And what you're going to find is that your chart reading intensifies. It becomes easier to determine what the market is likely to do. Um, it becomes easier to understand where the market is likely to go. You begin to recognize and respect those termination conditions, and you also find yourself in a position where you can take advantage of areas with the potential to break, making money on the way down. And over, guys, everything is cyclical. We're just creating repetition and recognition. And guys, this is the first hour of every classroom, talking about these rules, embracing these advantages, making sure that you understand what they are and where to find them. And then from that, you're going to grow a plan that really suits your needs. So I'm excited about the introduction of the reversal bar. I'm excited about, for those of you that are taking medium probability trades, for you guys that love to get into the market when areas aren't quite broken, and that's okay, they can be good trades. The introduction of this reversal bar may increase your success a little bit. It might keep you out of some of those losers when everything isn't perfect. Um, and I'm looking to see if we can find an example. I'm sure there's one this morning. That's okay. Are there any questions about high probability trend trades? Are there any questions about momentum? Are there any questions about termination conditions? Any questions about identifying your window of opportunity? Everybody's pretty good on this, right? Cool. So let's take a look. What time was your news today? Double check before we get sidetracked, right? 10:30 a.m. We're keeping our eyes peeled. So guys, let's just scroll back. Let's use the large chart a little bit. And let me show you a great study tool. And I want you to do this a couple times. I just want you to blow up your large chart. And if you have TechSmith Capture, and this is for you new users, how do I get to where I'm comfortable identifying termination conditions? How do I get to the point to where I can see these at a moment's notice? I want you to do this for me. I want you to open up your TechSmith Capture, and I want you to take a picture of what you think are a couple termination conditions. Highlight it, click, drag, hit that button, and I want you to draw an arrow because arrows are a great way to identify what's on the chart. It's a great way for you and I to have a conversation. And I just want you to scroll back a couple days and I want you to write the recipe for termination condition. Price reached, we'll call it fib resistance. All the triggers stayed below. This is a term, right? And now we have the recipe, we have the rules, we have it visually. I want you to do the same thing when support acts. And I want you to write the words, price reaches the area, triggers above. This is a term. Guys, this is how you create that recognition in the moment, by doing it when absolutely is nothing is moving. And then on that same token, draw an arrow to what you see happening with the trigger lines. Use that call out button once again and say small and large are apart. They are wide in direction of trend. This is strong triggers. This is rule number one. Guys, you have the advantage of scrolling back 10 days. 10 days to create these pictures. And then I want you to just copy it. And when you copy it, take this picture and drop it in the room. In your first week, guys, give me 20 or 30 pictures of your chart reads. Tell me what you see. Tell me what you think is happening. Tell me what you think your indicators are telling you. And what this is going to do for you, and this is a great way to learn things, take pictures not of trades, but of rules. Take pictures of advantages, drop them in the room, and let's have a conversation. And let's make sure that you're comfortable with what you're reading. And then it becomes easy to do it in the moment. Do you notice how the trend is down? The smalls are below the large are wide, they're angled in the direction of the trend. But 4382.27 is not broken. Both small and large have not cleared the area. And therefore, we're not getting caught in that indecision. What we see on that smaller, faster chart Do you see the relationship of the refinement, guys? This is one bar on the large chart. Look at all the bars that come together on the smaller, faster chart. This is why the large chart leads the way. This is why we focus on the large chart giving us those advantages. And guys, that's our first hour. This is what we do each and every day. Take pictures, post them in the room, tell me your chart reads. You guys that are taking those next level trades, or if you're just developing confidence in your entries, remember, large chart leads the way with momentum, making sure that you have a clear path, and then just identifying. Buying after an up bar, giving yourself that confirmation as the market moves up, waiting for a down bar, giving yourself that confirmation if that's more comfortable for you. And then John put in there, as a new user, we suggest waiting for an up bar, waiting for a down bar. And it really, I like how he did this. It eliminates the analysis skills required in the beginning to determine the best area. As you gain more experience as a next gen trader, you might place it at the area, that buy or sell spot, and not wait for an up bar. And this is the example of both styles, guys. Use that reversal bar for a week or two until you get comfortable and confident, and then he extends your management plan a little bit. So, guys, that's it. I'm gonna take 5 minutes. I'm gonna run a lap, see if there's any deer in the background or in the backyard here. Um, when I come back, we're gonna look at the live market. We're gonna talk about advantages as they happen in the live market. Man, we had Alan, I'll tell you what, I have seen no less than 50 deer since I've been here. I'm in the hill country in Austin right now. We've got an Airbnb that sits on about an acre, and I've seen about 25 deer just in the backyard. Couple bucks. Not allowed to shoot them off the porch, though. Are you? Very nice. I'm gonna go deer hunting this winter with a friend. I'm not much of a hunter, but I'm excited about it. So we'll see. Um, Come to Canada. I was in Canada like 3 months ago. Where were you? Not with Nexgen. That's all right. I was up there celebrating my anniversary anyway, so I wasn't allowed to go play. Guys, I'm going to take a few minutes. Do me a favor. If you have a question, post it in the room. If you are working on your chart reading, you know what, Debbie? I would say that I did, but I came from a desert. Um, so the weather was real similar. I like it. It's 48. It's kind of nice. If you have questions, post them. If you have pictures, post them. Yeah, I get cranky under 60 degrees. I'm not gonna lie. So winter is not my favorite time of year. I'll be back in about 5 minutes, guys, and then we'll start looking at the pictures that your poster and see. Life starts at 85 for me, Debbie. I'm that guy that when it's 105, I'm on the golf course and I'm as happy as I can be. Um, hot makes me happy. See you guys in 5 minutes, and we'll get to the second half of class, and it is all about you guys. Gene, true story. A great friend of mine lives in Minnesota, and he asked me to go ice fishing every year. And every year I tell him there is no way on God's green earth I'm planting my ass on the ice. Not gonna happen. It's gonna be way too cold. About it doesn't matter where they are. They tell me that it's warm in those little shanties, but I don't believe it. It sounds like shenanigans to get Texans out into the Arctic. I'll see you guys in 5 minutes. All right, we are back. Let's get this second hour going, guys. I'm going to start looking at the pictures that you guys have posted. I'm also going to remind you that the lecture part of this class is over. Now it becomes a discussion. So everything that you want to talk about, drop it in the room. Let's talk about it. I'm going to scroll up to the top, and I do believe Gene got us going here. And Gene has a different look on his charts. Gene doesn't have the traditional large chart, small chart. He looks very much for momentum, one of the chart reading concepts. He also looks for pullbacks to areas. And sure enough, when everything is going up, Gene goes up and the market works out beautifully. Gene, this is a great look. It has nothing but momentum. Everything is cranking and it works out. It's funny how that works. And it's funny how much we fight. I hope it's going to go up even though it's a downtrend. I hope it's going to go up even though I have anything can happen triggers. Guys, look at the separation between small and large. Whether it's an 8 range, a 5-1, or a 13-2, this is the look that pushes the market. Notice how there's nothing in the way. Once again, no matter what chart it is, guys, having that clear path, having all your charts agree is a huge advantage. Gene, I like the looks. I think it's a great lesson for you guys that are learning to get consistent. The less you fight, the easier it becomes. And then we have Gary showing me every chart in creation. I like it though. Gary has a termination. This termination tells him no more shorts. Such a great look. And he's saying, well, if I can't go short, let's see what's going on with the longs. He gets a couple divergences, and Gary takes what's called a high volume area trade. It's a different type of trade. Um, it's using a different chart, a third chart, to identify areas where the market is likely to continue. Once again, that chart reading. Gary, great execution, letting everything roll, and awesome money to start the day. Nice job. And then let's see who's next. Chris L, good morning. Let's see what you're doing. Uh-oh. Liquidation only contract is about to be expired. Chris L, what market is this? And did you reach out to Jason and Tech? And Chris L's not in here today. Guys, if you ever get a challenging, like if you ever open up your charts and there's any sort of tech challenge, if there's whether it is NinjaTrader giving you a weird message, if it's a gray screen, if you can't get your indicators, if you come over here to tech support, he's got quite a few tickets. Jason stays busy, but Jason's also crazy efficient, and he's really good at what he does. Do me a favor, make sure that you go through, instead of getting frustrated, it's not on you to know all the answers. We have people for that, right? So make sure that you get in line with Jason to get stuff fixed, because I'd hate for you to miss out the day. And then Jose, termination, everything rolls. Once everything rolls, you get to the other side of it. You take a little stab back, little momentum entry, and a quick exit. Nice job, Jose. Just taking a little chunk out of the middle. Nicely done. Let's see, who's next? Not a lot of pictures today, guys. It is a Monday, right? Gene, everything says down. I see a common theme here. Everything says down. The momentum is strong. You take a little pullback, and there it goes. You realize that the opening was soon, so you protected your profit tight. You said, you know what? With that open coming, I'm going to make sure I get paid one way or the other. Gene, nicely done. And you lost 5 ticks. Where'd you lose 5 ticks? You went long. Went long too early? Okay. No worries. Show me those too, Gene, if you need help. If you know why you did what you did, it's totally cool. You know your rules, so I know that you don't always need help. Nicely done. All right, and then Chef, still working on holding longer. For now, once you reach your financial goal, you get out. You're looking for 300 a day, 72 a year. That's not bad for a few minutes work. You had odds favorable. You didn't have a clear path. You did have a 50-50. Chef, do you see that? Your large triggers hadn't cleared yet. Right on, Gene. So you broke your rules and it didn't work out. Was that on the S&P? That was on crude? Cool. Guys, this sounds ugly and it isn't meant to be. I love it when you break your rules and it doesn't work because it reminds you that your rules are there for a reason, guys, and we're all going to break our rules every now and then. Chef, do you see how it's not a clear path? Yeah, it's close, but it's 50-50, and it's 50-50 with divergence. It's a beautiful entry, and it's a great stop, and it's quick profits, right? And then you got out of all of them. You just took 4 contracts right there. Nicely done, Chef. You took a medium probability scenario. And Chef, let me know if you like this one because I know that you're still in that trust building stage. Waiting for that reversal bar, like John Novak talks about, gets you in at almost the exact same spot. And it established your risk already. I think that's pretty awesome for new users. I really do. And especially, John and I were talking about it this morning. Hey, Gene, congratulations on that daily goal. We'll see you tomorrow. We'll do it again. And I think when you take away the advantage of a clear path and you have divergence, that reversal bar gives you a great opportunity to at least have a little bit of confirmation when you get outside of that high probability scenario. Nice trade. And I love that you're realizing that it's time to get paid, right? That's what we do. We get paid, guys. And Chef, you know that you're going to hold longer later, right? You take 3 off and let 1 run. Get paid on 3. Let 1. Test your theories. Nice job, dude. And then Gene was in here. Multiple divergence at fibs, terminations, 3 divergence. Everything said down. You went up and it went down. Pretty awesome how when everything said down, you went down and it won. When everything said up, it went up. David, you want the first one? It just has a little something to do with which trigger line changes the background color. The top one is the one that you've been working on. Gene's not in here. He had to go to work. But do you guys, and this is I think a great example. And we're going to use just Gene's charts as the examples. And that's okay. And that just gave you new charts, David, or it gave you fresh everything. So that 2023 dynamic Renko bar is the one. You have a lot of options. New users, old users. Everything says up, he goes long and makes money. Everything says down, he goes short and makes money. Everything says down, he goes long and is separated from his money. If you can just embrace the idea that fighting the trend and momentum is a recipe for disaster, why give it up, right? Why give it back? And then Jose, you decided to give it a try into the termination condition. I like that you recognized that it was a termination. And Jose, this is where at least having that reversal bar gives you a fighting chance, you think? But I mean, that's a termination. That's a termination. Every chart said don't do it, and you decided to give it. And you said the odds are good on all charts, and I have to respectfully disagree. Termination is not good odds. Termination is not good odds. All triggers below resistance beyond the outer bands is not good odds, Jose. You tried to beat the system, and the system beat you back. Alinsky. The only obstacle in the way. Yeah, that rule number 2 keeps you safe. Um, Alan, you said that this is the only obstacle in the way. Can we talk about that? You're saying that magenta line, that's got me. I'm going to get to it, right? Did you notice this giant red line that the triggers didn't break right there? So that this isn't the only obstacle in the way. You are 100% textbook termination. May reverse the market, may create a bounce, may totally ruin your day spot. Does that make sense? Price got there, none of the trigger lines broke. That's textbook termination condition. And look at the reaction off of it. But is it price, Alan? So what we have is, let's go back to the recipe for a termination condition. I'm glad that you said that because this opens the door for an outstanding, outstanding lesson. So the recipe is always price reaches the area. That's the first thing, right? But Alan, it's the trigger lines that define whether or not an area is broken. Um, where's my two-part picture? It's the trigger lines, not price, that determine whether or not an area is broken. So price can reach the area. If the trigger lines remain below, don't break it. No more trades into it. It's a termination condition. Even if price gets above it, if the trigger lines remain below, let's see if we can find an example of that happening. Um, price gets... I'm trying to look for a good example of it. Price gets well above resistance. The large triggers don't. It creates a problem there. Price gets well below, but notice how the large triggers don't follow. So, gosh, what an awesome picture, Alan. And what a great lesson that's going to change things for you, I think. It's you just found a key thing that may jack with you, right? Price reached resistance, the triggers didn't break yet, and look at the bounce. Everything still says up, but that fib creates that bounce to the lower area. Um, and the other thing, Alan, you're looking for that close above, right? You're looking for that NASDAQ close above. Yeah, one of the challenges with that, Alan, and it stinks. This is your close above. That's your risk all the way down there. Um, your entry, if you're trading that NASDAQ idea, is that if the small triggers are a full bar away, you're in at the area, brother, and it gives you time to react. It gives you time to take that first profit. It gives you time to have an established stop. Your risk goes below the reversal bar. So when I have a close way on the other side, and let me show you, I've got pictures. You know I've got pictures of everything, right? And I want to say that I had a picture of that. Um, it's the one that's called worth the risk. So everything says down. This is my area. Look at how far away that close is. There's going to be times in my life where I just say, man, I'm not willing to put that much risk on there. I'm not willing to put, and what was this one? This was 411. That was 8 points. That was 160 bucks per contract on a 50-50 trade, right? And then yours was from 26 to 34. That's at 8 or 9 points as well. And then check this out. As it pushes lower, Alan, and the large chart still says up, look at how this closed above the smalls. It's right there at all those areas, right? It's right there at those areas that you anticipate holding. There's points where I just won't do it because it's not worth the risk to me. And you may have a different idea. But I like my close inside of the triggers, or on the correct side of the triggers, closer to the areas that I'm expecting the bounce from, if that makes sense. Well, it's still into a termination condition. But as you pull all the way back to support, look at how your odds favorable, everything is up. It's just that lower push. Fibonacci created reaction, divergence pushed it lower, and then you get to the right side of everything with this look. Absolutely. And that's just like pure giddy upsville. And it takes you right to that problem that you identified. Does that make sense? Does that help a little bit, I hope? And for those of you that are in the room that are brand new, this is what we do. As long as you show me a picture, we'll have a talk about everything, right? We'll talk about what the advantages are, like trading with the trend and the momentum. We'll talk about what the challenges are, trading into this fib. And what do fibs do? Fibs create reactions. And that's what creates this bigger bounce that kind of jacks with the party there. So great picture, man. Thank you for sharing that. And I think there was a good NASDAQ lesson in it. Oh, Jose. They just missed you. Great look, though, man. All day long, Jose, I take that trade. All day long. It just didn't get you. Bummer. Guys, this is going to happen too, and that's where you just play the not my money game. It just wasn't meant to be. Guys, here's one of those 50-50 looks, right? Don't have the best trigger look. Large triggers haven't made it through 1, 2 areas. My small triggers are hugging the large triggers, not odds favorable. These areas have the potential to break, but do you recognize how we don't really have momentum? We definitely don't have a clear path. It creates that lower probability scenario. S&P has odds favorable momentum, does not have a clear path, but guys, there's your no divergence, strong triggers, pulls back to support. If you took the opportunity here, now you have divergence on a 50-50. Is everybody comfortable with the idea of the 50-50? Small triggers break through, large triggers don't. 50% of my trigger lines have broken through the area, 50% have not. I know I've got a lot of new people in this room, guys. If you're brand new, if you're getting in, if you were a little late to the day, which is totally cool, everything revolves around these advantages, right? Everything revolves around having momentum through strong trigger lines, having a clear path with nothing in the way, and having an entry area inside of favorable large triggers on that smaller, faster chart. We have already seen a couple advantages. We're trading into termination conditions. Giving up the advantage of a clear path has kind of pulled the money out of a few accounts. Allowing areas to break, right? Oh my gosh, and look how quickly that area refused to break with divergence. Did anyone get the first entry and have to manage out? Or did you guys sit on your hands? And that's the one that just missed Jose. And now we have odds favorable. The area has the potential to break. If you took the shot at it, you hit your first trouble spot. As the market moves through, Alan, do you see how the large triggers haven't made it yet, right? Small triggers made it. It had the potential to break. Still has the potential to break with momentum. But now we're on our second divergence. Now we're giving up momentum 2 times on the smaller, faster chart. If we go back to that KISS plan, that trading plan, on those 50-50 trades, guys, when the areas have the potential to break, your most conservative plan says don't let there be divergence on the 5-1. Your most conservative plan says make sure it's from a good top on that large chart or a good bottom on that large chart, right? Your most conservative plan says divergence, no trade. As you grow with the software through simulation, study, class feedback, and a lot of practice, that plan may change. Some of you might have gotten short here. Some of you might have gotten short here. But all of you should recognize 3 divergences in the same location and say to yourself, wait a minute, with weak triggers and 3 divergences, it has the potential to push up. Is it going to be 86.60? Is it going to be 76? Is it going to be 77? Is it going to be 98? There's really no way of telling, guys. This is one of those times where I like incorporating the reversal bar idea. We went through that first hour a lot quicker. So, Big Chungus, is there anything on your mind? Is there anything we can talk about? Anything that's going to help you um, recognize momentum? Anything that you're like, man, I want to ask, but I don't want to take up class time? I want you to ask right now, guys. Otherwise, my job security goes out the window. Billy Billion, same thing. So, Big Chungus, we're looking at 2 charts. We're looking at crude oil is the market that we're watching. We're identifying a large chart. That's a great question. And your large chart is going to define the direction of the market. Your large chart is going to define the momentum of the market. And your large chart is going to define the areas where the people that move the market are most likely to react. All of that happens on the left side. When you have momentum, when you have a clear path, when you have a market likely to continue in the direction of the trend, this is when we turn our attention to a smaller, faster chart. And I want you to notice how 1 bar on this big, slow chart, watch this if I circle it. This is crude oil, November contract 2023. This is the S&P 1223. No worries. So I go back and forth between the two. It's double the education opportunities. You can tell too, and it's funny, it took me a long time to get this. Crude oil almost always trades in double digits, 80s, 90s, 70s, 60s. Your S&P is in the thousands typically. So even if you miss out on this one, I usually look at y'all's timestamps. And when I look at your timestamps, I can know pretty quick. And then NASDAQ trades like in the 14,000s, 15,000s. And I'll open up a NASDAQ chart and you can take a look at it. Now, guys, I want to go back to this one. This is brand new. I'm going to drop it in the room for you. One more time. Happy but never satisfied. That's my brother, if you've ever met him. Talking about advantages. And I want you to see this right here. When you have the strongest look, right? When everything says up, identifying those areas inside of favorable large triggers, and then once you get an up bar, get in that trade, right? Get in that trade, 3 stops up, or 3 ticks below it, and looking for all that momentum to carry you. Same thing here, strong triggers down, everything says down, identifying that area through the pullback inside of favorable large triggers, and then just waiting patiently for that down bar, for that little bit of confirmation, letting you know that the market's doing what it's doing. Before you get there. So study that PDF, guys. Whoa, my NASDAQ looks a little silly. News in 3 minutes. Let's see if I can get my NASDAQ where it needs to be, and we'll see if that news does anything. There we go. So guys, this is the NASDAQ. It moves very similar to the S&P, but it typically, what do you mean, David? Is there a trick? It should load. Show me a picture of your charts. What are they doing? Maybe I can help you. Are they all gray? Is there absolutely nothing? No worries, I'll be here. News in 2 minutes. We have FOMC members speaking, guys. It's a medium impact news. Um, we'll see what happens. John Novak says ES trend trade. Everything was up. It's a short pullback to support. He waited for the up bar as we spoke about. And look at that. Sure enough, half off at the trouble spot, and he's looking for that next one. John, remember we do have medium impact news coming up in 1 minute. FOMC member Walker, I think, is speaking. Harker. Nice trade, though. The advantage, everything's going up. No divergence. He takes the pullback, and I'll be darned. It just keeps going, right? If it says get out, you will. Otherwise, you'll wait for the fib. I wasn't sure if that was Apex, and if it was, then I don't know if that news affects whether or not you can stay in it. That's all. David, talk to me about your chart. Let's see if we can get you loaded up. Have you gotten to Jason yet? He's always my first line of defense. But I may be able to help you. There's a little bit of news action, right? Okay, just making sure. Just looking out for you, big brother. That's it. Well, you're already up 10 points. No worries, David. Do you guys see it? Everything says up. The smalls are returning. The areas are trying to break. No divergence. John takes that little stab back, but he does it with the reversal bar up, giving a little confirmation that it's going to move in the direction of the trend. And he says 44.11 is his target. Well, 10.75. Nice trade, John. It's kind of cool when the CEO of the company, the guy that wrote the software, comes through and takes the exact same trades that we're talking about. Is it like a classic look? Not really. Some great chart reading, though. It's just a really short pullback to the areas inside of favorable large triggers, right? With momentum, no divergence, everything says up. It's a great look. It just doesn't look like, yeah, you're definitely doing something right. John wanted the lower point, but he was willing to pay more for the better entry. And doesn't it go back to that idea that when everything says up, it's a good idea to go up, and when everything says down, it's a good idea to go down? Just let your charts agree. What a great way to be. Embrace those advantages. Billy Billions, any questions that I can help you with? I know that you're brand new, Billy. Welcome to the class. It's nice to have you in here. Anthony, I see you snuck in. And you hit both large triggers, so you had to go, right? They were favorable large triggers, John. That is the best trigger look you could ever have. Feels like an advantage. Howdy. Oh, I love a good howdy. Welcome to the room, man. If you have questions, and I know you're going to have questions, dude, feel free to drop them in. Love it when it's a conversation. Big fan of it being a conversation rather than a lecture. That was it. That was a pullback to Fibonacci support. That Fibonacci support was inside of favorable large triggers. That's nice. And there's never anything wrong with being up $1,000 and having zero risk. Did it hit your fib? Egads, it sure did. Nice trade, John Novak. Anyone else catch that one? Because fibs are areas. Very well done. One of the things that I think is really cool is we had a termination condition that created a full reversal. That's the first step in the checklist. The smalls were still outside of the large. That's the second part of the checklist. Terminations, we didn't have a clear path. Awesome. Very cool, Billy. You'll find that this is a really cool community. Everybody just kind of hangs out and talks, and it's super supportive. And I've already made every mistake, so I know how to fix most of them. But guys, termination creates a full reversal. Full reversal gives me odds favorable. We do not have a clear path. And if we don't have a clear path, John Novak said, don't give me any divergence. Make sure we pull back to an area. Give me that third rule. Give me that other advantage. And guys, it's just rock star all the way up to the fib. This is what we do every day. Every day we get more and more comfortable and confident to be able to take these trades. That's it. And John, you had a little one-to-one there? Right on. Even if you didn't, it's pretty hard to be bummed about a 14-point trade, right? That's your day. You're done. Shut it down. Go call people. Go be important. Nice job. But that was it. That was what, 3 minutes of John Novak's life? Pivot stop out. That's a termination. It creates a full reversal. Gives odds favorable momentum. But look at that. It's right into Fibonacci resistance. It's right into an area that may stop the market. Some of you have been trading into termination conditions today. Some of you said, you know what? It can either break or reverse. Those are my only options. Not going to trade into an area. I'm willing to miss the move. Or some of you are going to trade into it. It's up to you. What you'll find is that I won't tell you what to do, guys. We'll just talk about advantages. But the people in control, the buyers that got us here, might have taken profits. The sellers that lost out here might be re-entering their positions. Every trigger is below resistance, guys. Always embrace the large chart advantages first, and then look for that entry that suits your that suits you best. Whether it is the up bar or whether it is the pullback to area inside of favorable large triggers, whichever one makes you the most comfortable. Let's see if the up bar protects us into a termination condition. We haven't had one yet. Rule number 2 is not met. The market still hasn't created an up bar. If both lines of the small triggers are above, exactly. It's a 100% termination condition, Chef. Great question. So if the small triggers, and the small triggers, I think that this is confusing. Some people go, well, this is a small trigger, and this is a small trigger. Chef, these work together. I want you to think of it, it's like a tube that you can see through. So when both lines of the small triggers are through, it becomes that 50-50 look. One of the things, though, Chef, is the further these small triggers get through, the more likely this one becomes to give you a better shot, right? If they just eke over, not always the best look. But the trigger lines act as one. So it's two lines create the small trigger. And in order for the area to have a chance to break, the potential to break, we want to see both of those lines get above the area of resistance. And then Ron says, you know what? If John can make a bunch of money going up, I can make a bunch of money going up. Just a different look. Nice job, Ron. Taking advantage of that clear path all the way up. Beautiful work. We're still below resistance, right? It did push back up with all that momentum. So, Chef, we may be able to talk through this live. One line is through, the second line is not. 76 still isn't broken. We are coming from a termination condition. If you chose to take this one, this is where that reversal bar gives you a little bit of an advantage, I think. Not the highest probability trade, really not at all. You're trading into termination conditions, but you do have momentum, and you do have areas inside of favorable large triggers. So it's 2 out of 3, right? Which means that you have to manage it, which means that with all of this momentum, if you decided to get into it, you knew where your trouble spot was. You knew where your profits needed to be. You knew where you needed to get. Oh, Daryl, don't waste your energy on regret. You made 4, and it looks like 7, 11 points, 500 bucks. Daryl, if I walked up to you on the street and handed you $500, would you regret it? Not one bit. Perspective, right? That's like getting full at the buffet and just pissed off. I'm so mad that I'm full. There's still food out there. Be happy, man. 500 is amazing. 500 is a great way to get things moving. It's easy to get caught up in that. I want more. There's more. I know there's more. You'll get it eventually. But until you're comfortable getting it, just get paid. Nice trade, dude. Very nice trade. Is it just me? I still get giddy when I take the same trades as my brother. When we have the exact same entry price, and I think, man, I'm trading the same advantages and the same looks as John Novak, the guy that wrote the software, the guy that created the methodology. I think that's pretty rad. Daryl, you did that. You actually got a better entry than him. Nice job. Did we know it was going to break? No. But Chef, now 76 has the potential, right? See how the smalls are absolutely smashed through? See how the large haven't? So it's not broken yet. This becomes frustrating because you're like, oh, it looked like it was going to go up. And then you get two divergences on an area that's not broken. And it does go up because we're not in control of it. And you have to be okay with that. You have to be okay with not being in a trade when your rules aren't met. Because I can tell you guys right now, success as a day trader isn't always about the trades that you catch, right? And Jose, I apologize. Sometimes it's about the ones that you choose not to take rather than giving the money back. And if you do $1,000 worth of winners and you give 800 of it back because you broke your rules, it becomes frustrating, guys. And then you find yourself breaking your rules, trying to catch up and trying to make up for it. So what do we think? Super strong triggers, larger up, smaller up, space between them, areas not quite broken. But in the event of a pullback here, does anyone feel like that's an area likely for the market to continue? Does everybody see it? Still a 50-50. Let's talk advantages. Termination created a full reversal. I love that. Gap between the small and the large. I love that. Haven't reached 97. That's a good thing. Every trigger up and the tiniest little window of opportunity. You're not a fan of that look, Jose? That's cool. No worries. Doesn't have to be yours, right? No divergence on a pullback to support. It would be tough to keep me out of that look because the termination created the full reversal. The large are almost all the way through. The momentum is its absolute strongest, and I don't have anything pointing down on my smaller, faster chart. I know the small triggers aren't cranking way outside, but they are above and they're pointed vertical. The likelihood of a pullback here is pretty small, but if it happened, some of you might take it. Not a good top. Odds favorable. 50-50 again, right, Chef? 90% of our day is sitting on our hands. 90% of our day is waiting for advantages. 90% of our day is just saying, hey, you know what? I'm cool if it doesn't put me in. Let's see what happens. Let's see if we get the reversal bar. What do you say? I should probably have an ATM strategy. We'll just do NASDAQ 2 lot. Notice how we didn't get it yet? And this is NASDAQ. It's a different animal. Still no reversal bar. On a 50-50, no divergence, but it's not from a good top. That's problematic. And guys, now I'm all the way beyond the areas where the market's likely to continue. My reversal bar doesn't happen until all the way down here. I identified my area, but I'm not getting a reversal bar from it, especially on a 50-50, not from a good top. I think I'm going to sit on my hands. I'm not going to hope. There's my S&P. No areas inside of favorable large triggers and no momentum. 2 of the 3 gone creates problems. Learning how to look both ways. Look at that. To the tick on crude oil. To the tick. Thank you, John Novak, for amazing fibs. Fibs work, guys. It's what you do in between. It's what you do when there's nothing to do. It's what you do when you don't have advantages that's going to define your success as a trader. I firmly believe that. 90% of your day is spent reading indicators. 90% of your day is waiting for advantages. 90% of your day is making sure that you have momentum, a clear path, and an entry area. If you focus on it, your second chart isn't showing. Is it not showing at all, Billy? Or like it's not on your screen, or it just doesn't have indicators? And are you comfortable using your TechSmith capture yet to take a picture? So like if we have that second chart, it's just not there? Because if that's ever the case, oh, okay. So if there's no indicators, is it you have price bars though? I know I have the microphone, it's easier for me. So check it out. If there is an F in the upper right-hand corner, do me a favor and hit it. That recenters charts. So a lot of times we find ourselves adjusting charts one way or the other, and price kind of goes off into the distance, and we're like, oh crap, there's nothing there. If you click that, that's it. It'll bring you back. And then the other thing is you've got the arrow in the upper right-hand corner as well, Billy. If you ever accidentally slide it over, and see how this is highlighted in black? That's the most current bar. If you ever don't see that and you click that arrow, it'll bring you back. John P says use NT7. And guys, I don't have problems on 8 so much. Kazulos, There's different things that affect it. John Novak's put together, let me get you to it, best practices for it here in the software user guide. Making sure that you have fresh data, making sure that you're going through, that your computer's running optimally. That's a big part of it. Once you are up and running, making sure that you're not clicking and dragging when it's trying to load. Writing through TechSmith capture rather than writing on your charts has a lot to do with it. Making sure that you have enough memory has a lot to do with it. I can tell you John Novak's working with a lot of programmers to try and dissect everything 100% to give it even more security. It just restarted. Okay. Do you go through this before you do it? Do you clean out your cache and tick? Get rid of your temporary files? All that good stuff? That helps a lot. That's part of my morning routine is going through that. Making sure that I'm not taxing my computer to the point that NinjaTrader 8 can't do its functions. But all of that's right above you. Take a look. Look at that, guys. Termination condition holding as well. And I know it's frustrating, and for some reason, some days it does it more than others, I've noticed. Um, and if mine does it more than twice in a day, I just clean everything out and start fresh. I'm speaking Russian. Watch the video. Here's the video. It'll literally walk you through every step. Oh, that was Greek. Dang it. So close. Greek to you. I got it. Um, Follow the link. Oh, where'd it go? There we go. It's a 2 minute, 13-second video. Go through it and take a look at it real quick. It goes through everything, but it all comes down to if you go to your file explorer, I'll give you the first parts of it. So here's my file explorer, and if I go to Documents, NinjaTrader 8, the first thing that I do is I go to Database. I've already done it, so it's not there, unfortunately. And in Database, I'm going to remove the cache folder and the tick folder. And what this is going to do is if there's the potential for corrupt data in there, it forces the system to start fresh. And then the next thing that I'll do is I'll go to the temporary folder in NinjaTrader 8, and every file in here I'm going to get rid of. And that keeps that data mismatch from happening. And then making sure that your window tab closes. Like there's all these little settings that'll stick in NinjaTrader 8. Making sure that you're working optimally, that your computer is running as fast as it can. 3 divergences in the same location. Into Fibonacci resistance. Nothing to do on crude oil, guys. There's that 50-50 that didn't work. If you waited for the reversal bar, it never really gave you one from the area. It just kept pushing higher. And now we're in indecision. And then that S&P, man, they're trying to get to that fib, aren't they? You'll see that a lot. You'll see them trying to make that next area. So, guys, I'm going to take a few minutes. I'm going to go reload my water real quick. If you have questions, please post them in the room. Kazulos, I hope I'm saying that right. If you have technical issues, guys, always get with Jason. Sometimes there's a little lineup for his attention, but I can tell you that the only things he cannot fix are things that aren't broken. He is an unbelievable resource for you guys, but we all feel hesitant going to tech. Oh, I don't want to bug him. Guys, it's his job. If you don't bug him, he's gonna be homeless, living under a bridge, eating beans with a stick. So use tech. Definitely use tech. Guys, I'm going to take 5 minutes. When I come back, we're going to get into the final hour. When we get to that final hour, I really want you guys to tell me what we're going to do. I want you guys to lead the way, to tell me what you want to talk about. If you're working on a plan, if you're working on management, if you're working on your entries, it doesn't matter to me. We'll talk about it. Otherwise, I'm just going to start going through my pictures and rambling. And my brother's going to send me messages saying, dude, stop rambling, and I won't be able to. So keep me from being in trouble, guys. Think of some good questions. I'll be back in 5 minutes. I am back. All right, guys. So here we go, tail end. Not odds favorable momentum, couple divergences, pushes lower, and sure enough, they make that fib, right? Just happened. Um, just made it to the fib. You see this a lot, guys. These fibs are so powerful. You'll see it happen where, let's see if we can find an example, where they don't make the fib and they push back to those key areas, and sure enough, they make it right to the next fib. This is a super common occurrence. Don't make the fib, push back to those key areas, off it goes to the next fib. Guys, we find our advantages in between these key areas, these decision-making areas. And the idea that when they're clear, when everything is above them, when all charts agree, that's where those advantages come in. So, good stuff. David B., what you got? David B says, I have a termination that creates a full reversal. I have odds favorable momentum, 50-50. And that one was a little iffy in the moment. And you take the absolute best entry and you take quick profits. When you get the pivot, you tighten your stop. Oh, and you did the old chum in the water, David. Need to trust it to get to the next area. That was so close, guys. And this is one of those stops where the market shouldn't go moments. David, I'm so guilty of that. Where you're like, okay, it's on its way back up. I'm good. And it's almost like they see it, right? It's almost like they're like, oh, crap, David's got to stop right here. Let's go get him real fast. And then we'll finish that move. It's a great trade, David. It's great management. I love that you took quick profits. I love that you trailed behind stops. And it's still hard to be mad, right? It's still hard to be mad about $170 on that second contract. Great trading. Great recognition of the termination. And John's right. You put bait out and the sharks are going to get it. It's like they know. John used to say, it's like they have cameras. Crude oil just keeps pounding up, right? Just keeps going. NASDAQ 50-50 with divergence. Once again, it doesn't work. How many times have we seen that today? How many times have we seen a 50-50 with divergence not produce a winner? There's a reason that in the very simple plan, that's one of the key concepts. So, guys, what do you want to talk about? You guys want to talk about odds favorable momentum? John Novak, do you want to talk about something specific? When he's hanging around, you know he's got something on his mind. Some smart stuff coming out. D-Rock, how's your day going? John P, doing all right? Craig, getting it done? Miss Debbie, Luciano? Not a lot of pictures today, guys. A lot of patience being exercised today, I think. A lot of waiting for the best of the best. And you're just sitting on your hands right now? Yeah, let's do it. Let's open it up and talk about it. John sent me this over the weekend. Right on, Big Chungus. That sounds good. So the first slide on the large chart, is this the one we're talking about, Chef? This is just reminding us about odds favorable momentum, right? That's all it is. On the large chart, we have to have strong triggers. From the point where the smalls break away until they come back, that's where we look, right? That's where we look for the longs. That's all it is. It's just a different slide showing you the exact same thing. This slide with all of the words on it could very easily be this picture, reminding you that it starts when it separates, and then that advantage of momentum goes away when it returns. So what the first slide showing us is that's just where we're looking. That's where we're looking for those opportunities. And those wicks are those pullbacks, right? And he does the same thing on to the downside. Where we start looking where we stop looking because this is where the absolute best of the best is. So I like it because this PDF was developed to maybe change the approach for entries a little bit, to help you guys work on management a little bit. But John made a point of reminding you that it's imperative. No, he's just showing you the exact same thing we talk about every day. He's reminding you that the large chart leads the way, that the large chart absolutely positively has to give you those advantages. And then that's when we'll look for those pullbacks on the smaller charts. He's just circling the wicks that were down the way. Those potential entries when everything says up. Pretty cool, right? It's the same message that's been going on for 20 years. Where's this link? And this link takes us right to termination conditions, reminding us that with that best of the best look, we just have to make sure that there's not a large chart termination condition. And then as a next-gen beginner, make your trading as simple as possible. This is the trend trade look and how you're going to enter a long trade. When everything is strong and going, waiting for the pullback. Wait for the up bar is what he's saying. Wait for price to touch any large trigger support line. And then wait for that up bar and go. Strong triggers down on the big chart. Everything says down. Wait for it to touch one of those areas in the highlighted circle. Down bar go. John, I like the way you did that. I like the word touch. I think that's powerful. Just wait for it to touch and then wait for a reversal bar. Even on this one, if you waited for it to touch, you still didn't get the reversal bar till down here. And then here's your great lesson on management. When you do get into that long trade, if you decide that you're holding for the next fib, David B., this would have been great, right? Don't move that stop until you get a new long signal. Don't move that stop until you get a new short signal. And guys, for those of you that are brand new to this PDF, the same way I am, go through it. And if you have a question, take a picture of it. Let me know. Write it on the chart and let me know. Because, guys, I'll tell you right now, John will definitely verify it. I'm so resistant to change. I'm so into keeping it as simple as possible, and sometimes I get my feelings hurt when I feel like he's trying to change things on you guys. So I scour this stuff, and then we have conversations about it. There it is for you, Daryl. And all it is it's helping you a little bit. It reminds you that the large chart leads the way, and then ways to get in, the least aggressive, de nada, and then ways to manage it off to that next area as you begin to read your charts, right? And then let's just go through the whole thing. If the market has a lot of support and a strong trend, you might wait until new highs are being made before you trail your stop. Let it get up here. Create a new high. Create that pivot. And then trail your stop. This is a great management thing. Everything says up. Your first stop is down here. Let it create that higher pivot. And then trail the stop. Just management things. Same thing with doing the trade more than once. That's your continuation look. And then exiting no matter what. And it says for now these patterns that will make you exit your position and wait for a new signal before entering again. No matter what. If you're long and the price reaches your stop, take your small loss and wait for the next trade. This picture is telling you don't revenge trade. Don't keep trying the same losing trade over and over because you expect it to win. If you get a second higher or lower divergence, depending on the direction of your trade, exit. You can always re-enter with a new signal. If you get a lower divergence, get out. Wait for the next signal. And if it doesn't happen, you don't get caught out of that potential trend stopper. Second one, notice that it never gets a signal. Guys, these are awesome. We saw this happen earlier today in one of the markets. You get your short signal, the second divergence. If you don't get the bar, you don't take the short. You guys that are a little more experienced, this will make a lot of sense to you. You guys that are brand new, this is kind of that next step. Yellow one-to-ones and divergence might end a trend. Short signal, exit Fibonacci support. After any up bar, get out. Stop hoping. Exit half your position at trouble spots. You can always add it back if there's another signal. Guys, go through this PDF. Put the fine tooth to it. Um, See how it lines up with what you know. See how it lines up with what you think you know. And offer feedback, please. We always, I want to hear from the student's perspective. So guys, if I present something and you think it's difficult, I want you to give me feedback, right? I'm not afraid to change it. Um, I try to keep it as simple as I possibly can. 1, 2, 3, 4, 5 divergences in the same price range. The triggers are up. Hi, Gary. Chef, do you see how the small triggers have not gotten through that divergence high yet? And then guys, when these triggers are flat, there is no momentum. Remember, for odds favorable momentum, both triggers must be wide and angled in the direction of the trend. So now not only do you have a termination, but you have a termination with flat triggers. 50-50 didn't work, 50-50 didn't work, and we're still into that termination. Congratulations, guys. You have a market that can't seem to clear the areas. You know that because of rule number 2. You don't have to guess. Weak triggers, multiple divergences. You have the clear path, but you don't have momentum, nor do you have areas inside of favorable large triggers. 2 out of 3 are missing, guys. Can't be an advantageous trade. So we just sit on our hands and wait. Let's see what happens. John went long. And then when John went long, he said if second divergence, it'll end it. And small losses are a normal part of a positive equity curve. Guys, when you're established in reading these things in the moment the way he did, -1 is not a big deal. Happens all the time. So let's talk about the advantages and let's talk about the potential disadvantages. And I like this because this goes back to every lesson that we just spoke of, right? So guys, I do not have the advantage of momentum. My small triggers are inside and almost below the large triggers. I do have the advantage of a clear path. All of my triggers are above resistance. It's behaving as support. So I'm kind of 50-50 over here. I've got large triggers up here and I've got small triggers down here, and that's where John instituted that, you know what, I'll get in a little at the area and then I'll wait for that reversal bar to confirm. And he knew that a second lower divergence could push it lower. So he didn't sit and hope. He said, I'm going to get the hell out of that trade. I lost my advantage. Guys, that's chart reading 101. Has anyone ever read The Art of War by Sun Tzu? I know a lot of people read that. There's a phrase in that one that I find pretty interesting, and it says that you must put yourself in the kill zone to be successful in battle, right? You have to take the trade. You have to be willing to lose a little bit every now and then in order to be successful. Um, Small losses are normal, totally normal part of the trading journey that you're on, guys. The key is to reduce those losses, is to not take unnecessary losses. NASDAQ is stuck. So So 90% of your day is going to be spent reading indicators. 10% of your day is going to be spent trading. This is where I just start babbling. Guys, to minimize the learning curve, and this is especially for you new people, or for you people that are starting to look at new trades, right? Starting to look at new patterns, starting to look at new management opportunities. This works for that as well, guys. You don't have to be in a demo to use this classroom. You can be 5 years in and just looking for a little help, and I will do my best to help you. But you've got to post pictures of your trades, guys, every trade. And if you're a brand new user, post pictures of your chart read. If you're sitting there and you're like, man, I can't find a trade, then take this picture and tell me what you see. And then we'll talk about it from a chart reading standpoint. If you win and the rules are wrong, you may have a short-term victory but a long-term failure. How are you going to know the difference? To be sure, you need feedback from us. We're here to help. If you place a trade on the simulator, participate in class, there's no risk of or loss of capital. You just need someone to tell you what you're doing right and wrong, guys. And that really is what this classroom is. If you're on a demo, what you're learning right now is the educational process. You're learning that we do try to keep it simple. You're learning that there is nonstop support Monday through Friday, whether it is tech or whether it is education. You're finding that you can get live feedback every day. Even the CEO of the company jumps in here and shares his trades, shares his thoughts on chart reads. Today you recognized that John Novak is never satisfied with good. He always wants it to be great, and he creates these materials to help you. It was perfect execution. It just didn't work. So guys, that's kind of one of the best things is the feedback in Nexgen is huge, right? And then I'm going to share a little snippet from Mark Douglas, the late Mark Douglas. And I like this one, and John just kind of exemplified it. When you stop expecting to win every trade, you're going to start winning most of your trades. When you stop caring about the result, but you're focused on the execution, you're focused on the advantages, you're focused on sticking to that plan that's been proven to win more than it loses, guys. Small losses become easy. Small losses don't shake you. They don't shake your confidence. They don't get you discouraged. You just realize that it's a cost of doing business, and that part of being a day trader is accepting what the market will give you in the moment. It's accepting the market giving you success, and it's accepting that sometimes the market's going to go against what your indicators say should happen. But you manage your small losses, right? And your losers are a reflection of that perfect execution gone wrong. D-Rock on NinjaTrader 8, it'll give you the prompt to roll it. So you'll actually get a pop-up tomorrow on the official roll date, and it'll say, do you want to roll? And then you can either click yes or no. Whoops. And then, but the other thing is, just so that you know, if you need to do it, in NinjaTrader 8, all you have to do is on one of your charts. I'm just looking for one of your charts. It's different. Let me just find a NinjaTrader 8 chart. All right, so we'll do it this way. We'll show it on 7. D-Rock up here. You're just going to type in CL1223. You're going to roll it manually. You'll type it in, and it'll change it for you if you miss that prompt for some reason. But today the volume was split. Today the volume was leaning more towards the old contract and less towards the new contract. It doesn't even offer an option in NinjaTrader yet because the roll date's tomorrow, D-Rock. So I went and put it in manually. But that's November, right? And then this is December. And then John says just type 12 now if you want 12. Thank you, John. So it's pretty split, but it's still leaning towards November. And then tomorrow's the official roll day. But John just gave you the picture right there. Type 12 in there if you want to do 12. But the volume is still lagging a little bit. There's still 25,000 contracts behind. Or December if you use months, not numbers. Thank you, John. None of that momentum. Second lower divergence. Nice reaction off of that one, John. Nice exit. Now we're 50-50 on the bottom. 75% of the time, it wins every time. It's got real bits of NASDAQ on it in it, so you know it's good. But guys, that second lower divergence idea is in that new PDF that I've shared in the room a couple times. Um, Let me just give you all the gifts that I have to give. This is a book called Emotion-Free Trading, guys. John Novak gave me this one a couple weeks ago. I've read it 3 times now. A lot of amazing concepts. A lot of amazing concepts to help you focus more on the execution and less on your emotions. Um, Another one here is Mark Douglas, late Mark Douglas, 7 Habits of a Highly Successful Trader. It's a must read if you're going to be a day trader. You know, it's funny. Sometimes the market slows down and nobody's posting pictures or asking questions. So I'm going to go mic silence, guys. If you have a picture or question, please post it in the room. Otherwise, I'm going to be quiet for a minute and then I'll be back. All right, guys, it turns out that I stink at sitting quietly. My brain doesn't let me do it. I'm going to share this video watch list. I can't not work. Video watch list, guys. Stuff for you to do if you're brand new. Take a look at some of the stuff that John's put together. I feel like I'm throwing a lot of props to my brother today. Tops and bottoms, trend trades, 50-50 trades. Isn't it crazy, D-Rock? I'm a huge fan of Mark Douglas. I've watched his videos. There's some great stuff. If you go to YouTube, if you go to the Nexgen YouTube channel and scroll towards the bottom, there is the Mark Douglas playlist going through it. Man, that's a just great sitting around. Even if you listen to it and don't watch it, it's awesome. I'm going to tell you though, if you do that, make sure that you put it on 1.5 times speed because he is the king of the awkward pause. And he has a very, very slow cadence. Jose, triggers reverse, everything down, little snapback, quick profits. And then we're into that pivot stop out and you're like, I'm not giving anything back. I made some money. Thank you for that, Jose. D-Rog, I was saying I agree with you 100%. Mark Douglas down at the bottom here. Great watching stuff. And then Jose, I was saying awesome, awesome trade. And I like how you're not greedy on these. You get in, you take profits, you're unwilling to lose as the market hasn't completely reversed yet. and into that trouble spot. A reversal bar takes you out. I think that's great because you know through patterns that if this reversal bar hits, it's likely to come up and touch those triggers on the S&P. Solid trading, Jose. And there it is, and you're probably out of that trade right now. Waiting for the next great opportunity, right? Nice trade. Everything says up and the path is clear. If you took the no divergence, that's the exact same trade that John Novak took earlier today, all the way up to divergence, which pulls us back again. Anybody go long? 87.20-ish, 87.27. Everything's cranking short. 50-50, but with two divergences. Getting squirrely. Hurry up and wait, guys. Everybody have a good weekend. Just in a holding pattern, just waiting for the advantages, waiting for the advantage of momentum, coupling it with a clear path, making sure we're pulling back to those lines, right? Pulling back to those lines inside of favorable large triggers, maybe waiting for an up bar if it's not perfect. There's one of those second lower divergences. Let's see what the market does off a second lower divergence and weak triggers. See if we can begin recognizing patterns. I like that, D-Rock. I had a buddy that I worked with a while back, and he came in, and he looked like he had just been punched in the nose. And I was like, "What's up, man? You having a bad day?" And even though he had just had a horrible thing happen, he goes, "Man," he goes, "I don't have bad days." He goes, "Every now and then I'll have a bad moment." He goes, "But it never gets to define my day." I was like, "Whew, I like that." Where the rules are met, Rakesh. So if let's go back to advantages, and I'll take this right here as the look. If we go back to the advantages, the idea that momentum, a clear path, and an entry area are what it takes to get into the market, right, Rakesh? Here I don't have the advantage of momentum. Would you agree? I don't have that odds favorable. My smalls are riding. So I don't have the advantage of momentum. Okay. Did you want me to explain it? Because there's no entry here. I can't explain it real time, Rakesh, because there's no entry. Because not only do I not have momentum, I don't have an area inside of favorable large triggers. I have no idea. And that's kind of where I was going with this, is I'm piecing it all together. And it's the idea, Rakesh, that not every move has an entry. Not every move fits the rules. Not every move creates an opportunity. At this point, and this is kind of where I was going with this. Let me go through and let me see if this makes sense. At this point right here, I have a clear path and I have an area inside of favorable. I have no momentum. So I have 2 out of 3. So I could call this a medium probability entry. Does that make sense, Rakesh? This is as low as I'm willing to go. If I forfeit momentum, I better have a clear path in an entry area. If I forfeit a clear path, I better have momentum in an entry area. Um, and I don't care about an entry area without at least one advantage on the large chart. So when we get to the second one over here, once again, I don't have momentum, but now I also don't have an area inside of favorable large triggers. So I'm giving up two of them, which means for me, Rakesh, I'm not willing to sacrifice two things and still take a trade. And the same was true right here. I don't have momentum and I don't have areas inside of favorable large triggers. So the only one that I would say even fits a rational thought process is this one right here, where you still have the advantage of a clear path in an area inside of favorable large triggers. Does that make sense? So in the moment, I always run through that, Rakesh, in my head. Every time I chart read, and maybe this will help you with the live chart reading, because let me see if I can pull this up. The same thing that I teach every day. Um, Momentum is a separation between the small and the large. Momentum means, here, let's go to the checklist that I give you guys every day. I like this picture a lot. Maybe I'll steal this one and change the one that I show in the morning. Small triggers are up and above the large. Let's make this bigger. Small triggers are up and above the large. The large triggers are widening. The space created lets me know that I have odds favorable momentum. Small's below the large. It's the separation, Rakesh. I think that's the key look. Is it's having space between the small and the large. That's what lets me know that I have that momentum, that I have that best of the best look of momentum. Because when they return, anything can happen up or down. So when I look at what was happening in crude oil, anything could happen up or down, right? I don't have that best of the best trigger look. I do have a clear path. And then over here on my smaller, faster chart, I can see it as well. I can see three divergences in the same location also says longs are done, right? Second lower divergence says longs are done. And look at how the market reacts. Does that make sense? But momentum never changes. Momentum has nothing to do with price. Momentum has nothing to do with areas. The only thing momentum is dependent on is the distance between the small and large. Does that help? I hope. So, so momentum is independent of anything else. Momentum is 100% dependent on trigger lines, has nothing to do with the clear path or the entry area. And once I have the separation between the two, that's when I start looking for that clear path. And then when I have that clear path, that's when I start looking for that entry area. So you've really got to put one in front of the other. There's sequential, but it's the accumulation of the advantages that create a trade. And it's the absence of the advantages that suggest that you should just sit on your hands. Does that help, Rakesh? Paul taking a momentum style. Maybe not a good top. All my triggers broke. It's just a pivot with a loss of momentum, Paul. Two divergences suggest that it may push lower. We don't know where that lower point's going to be. Oh, that's NASDAQ. No areas inside of triggers, no trade for you, John Novak. I like that you have rules. And then, Paul, do you see how all of your triggers broke resistance? It's just a divergence coming from nowhere, which means that your midband has got to be a potential stop spot if that doesn't hit the brakes on it first. Hope that makes sense. Not a good top because your triggers smashed through. Your triggers got to the other side of the divergence high. Your triggers got to the other side of Fibonacci resistance. And then when they come up and retest it exactly, we'll have an idea of whether or not that was going to stop the trend, or if it's going to be another one of those instances where they say, you know what, let's go to the next Fibonacci level. Just too soon to tell. Great pictures from both of you. You guys can hear me, right? Rakesh, did the momentum lesson make sense? Okay. I think sometimes, I know I did in the beginning, is I would confuse the lessons a little bit. I would forget that they're independent of one another, that momentum is momentum anywhere, any chart, right? It all revolves around trigger location. And then once I have that, I kind of put that book down and I pick up the next one about termination conditions. And then once I have my termination conditions, then I kind of shift over and start looking for those areas. But it's one before the next. And so Rakesh, that's totally normal because you're still learning the looks, right? So keep it simple and let's read through it live right now. What do you say, Rakesh? I'm going to go through exactly how I read a chart. So what direction is the trend? Guys, everybody feel free to play along. Just give me a U or a D. Are we going up or are we going down in the S&P? We're going down. So I'm only looking for rules to be met for high probability trend trade short. So the first thing I look for is momentum. Most current bar. Are my small triggers below my large triggers? Are they both wide and angled in the direction of the trend? This is rule number one. Do you guys see odds favorable momentum? Most current bar? And it's cranking. It's absolutely yes. So rule number two says I look for termination conditions. Has price reached a Fibonacci area? Not yet. We reached a mid-band, but the large triggers are so close. Not a term. My next fib is all the way down here. So I have odds favorable momentum. I'm in a downtrend, and I'm not into what's called a termination condition. So now I turn my attention to my smaller, faster chart. I'm looking for favorable large triggers, and I'm looking for areas that may fall within them. And so far, I don't have any, right? I need it to push down a little more to get that mid-band, to get those one-to-ones in there. So Rakesh, it all starts here, looking for those first two advantages, and then once I have them, then I'll turn my attention to see if I have a potential entry. And it's easy to do at hindsight, and I love that you posted that because I told somebody else. They're like, "Man, you're so good at this, Mark." And I was like, "Well, the reality is that when nothing is moving, it's easy, isn't it? It's easy to identify momentum. It's easy to identify termination conditions when the market's not doing anything." But in the 8 seconds that I asked you guys if we had momentum, 4 bars printed. So you have to remember to stay focused on that first bar, right? You have to remember to keep it sequential. Do I have odds favorable? Do I have a clear path? I'm waiting for a reversal bar, right? And if I get it, these large triggers in midband may hook up for the potential entry. But it comes through repetition, guys. And I can tell you that the more pictures you take, and the large triggers will push down a little bit as it comes up. The more pictures you take, the more pictures you take of odds favorable momentum, the more pictures you take of termination conditions, when it is sitting still, when it's not doing anything, the easier it becomes. Well, if I get a reversal bar, Rakesh, my rules say identify my favorable large triggers, and then trades come from areas within the favorable large triggers. So really the only thing that's even close right now is potentially that mid-band. If it pushes down a little more, then those one-to-ones may come into play. Does that make sense? I really want these to be inside of these large triggers. That's my best chance of success. But I'm waiting for a pullback. I'm waiting for a reversal bar over here. See how they're all coming together now? I'm just waiting for that reversal bar on my smaller, faster chart. And if I get it, I'm going to right click and I'm going to have that sell order right there by those lines inside of favorable large triggers. And that right there, Rakesh, man, that's your entry. And now it's just a waiting game. Now we're just waiting to see if they come back and get me. And the challenge is that I can't make them come back. I'm not in control of that. They're under no obligations to push up to my. The rule is that your entry should be at areas inside of favorable large triggers. So rule number 3 in this case says sell a pullback, meaning that little retracement in price at an area, fibs, midbands, yellow 1-to-1s inside of favorable large triggers. So it's kind of those 3 little phrases that come together at my lowest point of resistance. And then Rakesh, the PDF that John Novak, yeah, they're cranking, right? Look at the momentum, guys. Paul, nice trade. So Rakesh, I'm waiting for this bar, and I'm hoping and praying that it gives me a reversal bar. And if it does, there's my areas inside of favorable large triggers. I have an entry order waiting. They're trying. The buyers are trying to push right now. You can see it. Come on, buyers. But I still have the advantage of momentum, and I still have the advantage of a clear path. See how the buyers are trying right there at that midband from a bad top? But you can see the little fluctuations here. These are just ticks. Here I have odds favorable. Here I have a clear path. Here it's just little ticks. I'm rooting and praying and hoping that there's just a small group of yahoos willing to fight that momentum and the trend to get me back. And they're trying, but they're not there yet. So I'm still in no trade, Rakesh. I'm still in a holding pattern. I'm still waiting for that reversal bar back to the areas because that's where my biggest advantage lies. Does that make sense? Does that help a little bit? Awesome. Yep, me too. And then when it moves, D-Rock, just like that, same thing. I mean, this is it live. Rules 1 and 2 haven't changed, right? The only thing that's changing are my areas where they are, so I keep moving my stop. No big deal. I'm going to follow that mofo all the way down. That's where my advantages are. Um, Now my window's a little bigger though, isn't it? There's my highest point of resistance. There's my lowest point of resistance. This green box represents where the market is likely to continue. And Paul says, with all that momentum, I sure hope you guys don't get a pullback. Nice trade, Paul. Paul's hoping for no pullback. If he gets one, you'll take it again, huh? But guys, this is it happening live right now. This is happening live in the S&P. Odds favorable momentum. Everything says down. There's that second lower divergence John Novak talks about, pushing it down. That was just a little bit of overrun. And now they're trying again. Now they're trying to push again. Everything that I'm in control of has already happened, guys. I'm in control of being sure that I have momentum. I'm in control of being sure that my path is clear. And I'm in control of making sure that my areas are inside of favorable large triggers. And then all I have to do is activate a limit order. Newer guys, does that make sense? I'm not in control of whether or not the pullback comes. But this is a look that gives me all 3 of those advantages that I look for to get into a trade. This is the look that gives me, I guess I closed it out. This is the one that gives me everything that I look for. This is the one that gets easier and easier the more you study it. Debbie, I may have. Can I say no? Of course not. You probably just went to the bathroom. Sorry, Debbie. Here we go. Let's see. Debbie, it all set up and you went up. Stop keeps you safe. Out. I don't. Can you? I have to be in a trade to have a stop loss in there. But absolutely, you can move it up or down. Debbie, you took advantage of a strong trending market. You took the shot and you kept yourself. That's a great stop placement. And this is the idea, guys. When they don't hit fibs, they love to go hit fibs. You knew it. You took it. Great trade, Debbie. So, Kazulos, I have to be in a trade to be able to move it. Right now, it's just a limit order, right? But if I just jumped in, there's my stop loss. Initially, I have to put it where the market shouldn't go. This is why I don't jump in without a retracement. But you can click and you can move those anywhere. You can move your stop to the wrong side. It'll pull you out, right? You can hit close, but you can adjust those all day long. The idea is that once you get into the market, your stop goes where the market shouldn't. And then as the market moves down, you can trail behind. You can trail behind and look for opportunities. And if I look at Paul's picture before, see how he moved his stop? He says, you know what? If I get a reversal bar, I'll get out and I'll just wait for the next trade. I'll get paid and I'll wait for the next trade. And that's exactly what he did. He's like, I'm out, but I'll take it again if it comes back. Does that make sense? And yeah, it didn't come out. It didn't come back. Not yet, but I still have odds favorable. And I still have a clear path. And I'm still hopeful. Let me get that stuff out of the way. I still have every rule met. We're just waiting, guys. We're hoping that they come back and get us. We're hoping that they come back and get us at that area inside of favorable large triggers. Waiting is the hardest part. That's it. Tom Petty said it best, didn't he? You guys try and get that song out of your head now. And sometimes they just go right to the target. Watch this. There's that tail with the clear path and odds favorable. There was your pullback to resistance inside of favorable large triggers. Easy after the fact, right? Odds favorable, didn't reach anything, triggers cleared everything, pullback to resistance inside of favorable large triggers. That's the pattern. We can't guarantee the pullback. We can guarantee the advantages. Just waiting. No, can't guarantee the win, but you can guarantee that you have a statistical advantage if you get that trade. Missed you by a tick. So close. But you knew what you wanted, right, D-Rock? You knew exactly what you wanted. You knew exactly where you wanted it. And when it didn't get you, you said, not my money. Guys, they're trying again. They're trying to get us again. They're trying to push up again. Don't know if it's going to happen. I love it when these things set up live, guys. Look at how much time we've had, though, from our first decision that we should be looking. We've had 7 minutes, and the large chart has never changed. The large chart is still odds favorable. The large chart is still clear path. And the small chart still has an area inside of favorable large triggers. We got our reversal bar. Our highest and lowest point of resistance is one line. inside of those large triggers, synthetic triggers, one on top of the other. And even if there's a divergence, yeah, one divergence isn't a killer, is it, D-Rock? Not with odds favorable and a clear path. Where shouldn't the market go? Somewhere right up here. With all that momentum, let's put the D-Rock target in. He'll put his second one down here to fib. Have the advantage of momentum. I have the advantage of a clear path. I have the advantage of having entered inside of favorable large triggers. And guys, the second option is you can wait for a reversal bar. You can wait for a down bar before you get in if you want to. That's totally up to you. Give me a Y if you see it. The advantage of momentum, the advantage of a clear path, the advantage of having entered inside of favorable large triggers. Stop where the market shouldn't go. I've got it at 2.5 points. It's about $125. And then if you wanted to wait for that reversal bar, guys, then we're just waiting for it. If I get the reversal bar, we'll just add on. So we can show you both. That's one entry option. Just below the area inside of favorable large triggers. The second option will be if I get a reversal bar, I'll click sell market. Do you see how it fluctuates up and down? We're not the only person making decisions here. But this is a look that typically wins 70 to 80% of the time. So Paul, John did a little research and stuff like that, and it just turns out that this entry is scary for a lot of people. Getting in at the area um, is it's a little nerve-wracking for some people. So if you don't want to just get in when the market's coming up, you can wait for that reversal bar. Go ahead and establish your risk. Get that confirmation that it's going in the area. Neither is wrong. This one takes a little more confidence in your methodology, and until you develop that confidence, a reversal bar just it gives you a little confirmation. Yeah, and you have to decide whether it's too late or not, right? I still have plenty of room to targets. I feel pretty good about it. So if I get a down bar, another way I can do that, guys, is I can right click and I can put a sell stop in on the reversal bar marker, which means if I get a reversal bar marker, it's going to put me into the position right here. If I don't ever get the reversal bar marker, or if I don't ever get the reversal bar, I'll never be in the position. And while you watch those fluctuations, do we still have the advantage of momentum? What do you guys think? I think we do. Do I still have the advantage of a clear path? I feel like we do. I have room to my target, right? Has anything changed since the time I've gotten in? Even though I watched my P&L go up, I watched it go up to negative $125 at one point. So Kazulus, once we're in, I can click and move a stop if I want to. I'm not going to touch it yet until I get a reversal bar, and then I'll reduce risk behind it. If I never get a reversal bar, well then I have to take a loss here. I'm okay with that. And D-Rock, you're at 8 ticks. I'm going to force it to give me a reversal bar on the large chart to get me out. I'm willing to pay that extra 2 ticks. That's just me. You could defend this one in a court of law though, couldn't you? Odds favorable, clear path. Heck yeah, you could. If it loses, does that mean that our plan sucks? Or does it mean that it's a cost of doing business? Guys, I don't have any control right now. Just blame me. But I guarantee if you take 100 pictures like this, You're going to see 20 to 30 losers, but you're also going to see 70 to 80 winners typically. We just don't know which one's going to be which. Anthony, everything says down. The path is clear. Your entry is absolutely perfect. And that may be the smallest target I've ever seen in my life, Anthony. You made 3 points real quick. All right. Your commissions are going to eat those up, Anthony. Right on. You'll learn to trust the large chart as you see it. Oh my gosh. Great trade, David. Everything says up. The path is clear. 3 divergences. You got nervous. That's okay. It can kill the trend. There is no should have re-entered. It's just I didn't because I saw a problem. So now you study the problem and maybe you take it next time. Nice job, David. Look at that, guys. They're still fluctuating. We are not the only people making decisions at this key area. That small chart, those little fluctuations, they're showing you that other people are thinking, man, this sure looks like a good place to go short. And some of the buyers are saying, man, I feel like I want it to go up so I can get in and ride that wave. Look at it go. It's just like, ugh, it's trying. It's just trying. So if you're in at the area, awesome. If you're waiting for that secondary entry, your secondary entry is at 44.01. That's where the reversal bar is. So we're showing kind of both sides of this. I know John Novak's in the room. I want him to see how awesome it is, where we can actually see both sides of it. We can see getting in directly at the area, and then if we get the reversal bar, our risk will be established, and we'll drop it about a tick. This is what we do every day. Look for advantages, and when they happen, we become traders. Until then, we're professional waiters. Guys, that's just about it for the day. Any questions? It depends on your broker, Anthony. It's usually somewhere around $8 around turn. So you probably gave up on the 2 lot 16-ish. Yeah, it's okay. Oh, you're doing great. Just patterns. You're just trading patterns. The patterns don't know that it's futures. The patterns don't know that it's the S&P. The patterns don't know that it's crude oil. All the patterns are is just a result of things that have been happening forever. Whoop, there's your reversal bar. So now if you took that secondary entry, you're 2 ticks above it, 3 ticks above it, I think is what the manual says, right? You got a confirmation bar. I'm actually in 4 contracts now. But those are your 2. No, John, it's because we got in on the first best at the area, and then we show how you can get the entry on the reversal bar as well. That's all we're doing. I'm not worried about this. It's simulator and class for the sake of entries. Whatever happens, happens, guys. But this is what we're going to talk about every day. We're going to go through this every day. We're going to talk about the advantages on the large chart, leading us to looking for entries on the small chart. And you guys are going to do what works best for you. And that's it for me today, guys. Thank you for being here. Thank you for the questions. Thank you for the participation.